gets that.
What's good, everybody? Happy Friday. Hope you're having a good day, good week. The market's attempting to come off of the lows. Typically what we do here on Fridays is sort of go over the week. How did your retirement investments do? How does everything look? If you're a client of Jazz Wealth, we'll give you sort of an update as to how the markets did and how that may have helped or hurt you. And then if you're not a client of Jazz Wealth, well, maybe you learned something, leave us a comment or give us a subscribe and help us out. We just hit 10,000 subscribers. I don't even know what to think about that. That's just, I keep, talking about that. My daughter's tired of hearing about it because I think it's pretty cool, but she's done hearing about it. So I'm assuming you guys are done too. We'll move on. Here's to many good things going forward. Before we get into the markets, a couple little housekeeping notes here. We have a new YouTube schedule for the videos, the educational videos that I post. Actually, I'll tell you exactly how it's going to go. Each day we're going to have a theme. And so what we've done is broken it down into a couple different categories. Monday is going to be Money Monday. We're going to cover personal finance things, tips, tricks, help, anything that I would sort of help our clients out with. I'm going to give you some videos on that. Tuesday is going to be Teachable Tuesday, just going to be some education. It may be something about explaining a basic part of the market, some form of investing, what do different investment terms mean. Retirement Wednesday, we're going to do IRA stuff, a lot of the videos that we already do. Tutorial Thursday, we're going to cover nest egg for our clients. So if you're paying attention, you want a little sort of help with that and sort of use that a little bit more than just the basics there. We'll do nest egg. We're going to cover the folio application where you log in to see your account. We're going to cover that as well. We'll do some tutorial videos, more in like a webcast sort of a thing where we share the screen. And then Friday is going to be our wild card day or Fun Friday, as you saw today with our video. Just had some fun coming up with different studies and ideas as they pertain to investing. I hope you enjoy that. Leave us a comment. Let me know what you think about that. That's our new YouTube schedule. Me and my brother, we're actually working on a podcast. We're just having fun with it. We're probably going to change the name, but we're basically just trying to have fun with investing, news stories, finance. And look, I won't promote this on YouTube, but I did post this today. If there's a segment that we're doing that I call Sad But True, and I read off two stories to him, and one is very, very false, has to do with public companies or CEOs, things like that, and one of them is very sad but true that this actually happened. So he has to try to guess which one is sad but true and which one is false. And I'll tell you, he's 2 for 2, but the one we did yesterday, I mean, it's sad really that this happened, but was so funny I couldn't even make it through it. So if you want to check it out, it's like a 3-minute clip on YouTube there, Sad But True, episode 6. And I hope you like it. Leave a comment if you are as shocked as I was about, which one was actually true. I don't want to give it away. I don't want to give away. All right, so let's go over to the markets today. We had a little bit of a disconnect, okay? So we know that from time to time, the markets will not move together. Now, there's always a reason for that. So typically, the S&P, the Dow, and the Nasdaq, they're all moving in the same direction. And so if one day goes by that you see the stock market is disconnected, where on TV they say the Dow was down something, the S&P was up something, well, that means that something in there was really an outperformer or a weak position. So I want to talk about that today, give you a little help with that. So if we take a look at the charts here, we've got the S&P 500 on the screen, sort of a bad week for this one. We're going to actually transition over to a weekly time period. So each blip that you see on the charts here, these are candlesticks, but each one of them represents 1 week. The red one that you see furthest to the right here, that is this week, complete, in the books, done and over with. And what you can see here is, although the trend is still very much higher, everything is very strong, it's been a little shaky right up here, right? So this week was a down week, just by a little bit, but for the most part, the market is maintaining, the S&P 500 is maintaining its gains. The Nasdaq 100 is by far your leader. That is the strongest of all of them, really, just holding up here at highs. Again, a little bit of a sort of a pullback here throughout the week, but basically the trend still remains very, very strong. The Dow closed lower, and it closed lower on the day. So we go, what's going on, Dow? There's something in there. Well, Dow McDonald's. That's going to be your key thing there. McDonald's was downgraded today. It's lost 5%, and so that held the Dow back today. The Dow was lower by 71, pretty much thanks in most part to McDonald's losing about 5% on the day. So, you know, it happens. The Dow is down. That's why we don't focus so much on the Dow, because the Dow is only 30 stocks, right? Sometimes 31. So we don't mess with that. The Russell, your small cap stocks. Actually, I'm not going to use that as my example. Let me show... let me see if I can find an ETF here. So here's the Russell 2000. That was a leader today. We don't talk about the Russell 2000 much. Those are your smaller and mid-cap companies, the faster movers. When the economy starts to change, you typically see the Russell 2000 give you the first hint that things are good or bad. That was your leader today. Very, very strong. So if we stay here on the retirement side, your broad market, sort of large, you know, spread out ETFs that we use in our retirement accounts for our clients all did, you know, sort of weak on the day, but saw that start to bounce back. So while the week may be negative for the broad markets, the broad indices, not too bad. You saw people start to come in and start buying that dip. Tech was your leader. And again, we just looked at the Nasdaq, so we know that all those tech stocks are really strong. Not so bad there, really. If we go over to energy, energy is going to be one of the weak points in your portfolio for anybody, actually, if you're investing in sort of the large, broad stock market. The energy sector was the weaker one. That's going to have to do with oil. This week, oil was pretty weak, right? This week. So oil slid down pretty good here, all the way down to these lows. But today, just like the stock market, found a little bit of support, meaning buyers thought, hey, that's a good discount, and started to buy it. So throughout the week, your energy-related products were very weak. Commodities also, if you have any commodity ETFs or mutual funds that are invested in that, those were a little weak as well. However, they did see a bid there towards the end of the week. And all that means is they did see some bidders, meaning people wanted to come in and buy it. We'll go over to gold real quick. Similar story in the commodities ETFs. Anything that you have that's exposed to commodities, little weakness, but starting to bounce off those lows. Overall, not doing too bad. REITs, anything interest rate sensitive. Ooh, little struggle there. I know some of you are sort of diehards on the REITs and you like having those. You're just going through a little weak patch right now. If you're a long-term investor, you know, you might have some more pain to go through as the interest rates continue to go higher, but you know, you could see it as more of a long-term discount. I don't really have an opinion too much on the REITs right now. And then if we go over to bonds, let's see, where do we go here? We're going to go with the, we'll go with the short-term bonds first. Of course, interest rates are expected and are sort of planned to go higher. So anything interest rate, bond related, REITs, utilities, they tend to be suffering a little bit because they rely on those low interest rates. So not a problem there. Overall, if we take a look at that weekly time period, the stock market's still in fine shape. It's just we were used to slow and steady for so long that now when the markets wake up a little bit, people go, oh my God, what is this? You know, is this something that we should be worried about? In reality, we're just sort of playing ping pong near the highs here. So nothing too scary yet. The focus next week will likely be on the tariffs. And I see some comments actually over there. I'm going to try to get to those questions. I know there's a little delay in this live stream here, but I don't think it should matter. So I'll see what I can do with those questions. Trying to get a little better at that. Retail stocks. I'll pull up the retail ETF. Started off very, very weak. This was the week where they reported earnings. So if you had any retail stocks individually, or you had any exposure to the retail sector, a little scary to start the week, but this is the main week where they all sort of blast out their earnings, or at least the most of them do. And so it got a lot of attention. We have names like the Gap. The Gap was actually the leader in the S&P today, I believe. It was up about 8%. Let's take a quick look if you're still with me here. Yeah, the Gap was up 8%, almost 8% today. Good earnings. I like what the CEO had to say. We're going to talk about that in the podcast later. Nordstrom. So you've, oh, did I do it wrong? Yep, JWN. That's the symbol for Nordstrom. They released their earnings. It started off lower initially because the company said they're not going to actually talk about, or they're not going to release their online sales versus their in-store sales like they used to. They used to keep the two numbers separate so we could see how they were doing. they decided to put them together and they're not going to sort of differentiate the two. That sucks because we all want to see how you're doing online. We don't want to see how you're doing in the brick and mortar stores. We know that stuff's kind of going downhill. But Nordstrom is also going to be going private. So they're kind of like, you know, we don't care what you guys think. We're going private. We're not going to have to report anything soon. So we'll see how that goes. JC Penney. Not good, right? I don't even know. Is there a JC Penney? I'm not sure. Let's just move on. They're not doing very good. Foot Locker, not doing well either. Also, both of these were earnings. Brick and mortar stores like this really struggling. We know, right? Amazon's coming in and dominating. These guys aren't adapting fast enough. They're not changing to the model that can compete with Amazon, unlike some of the other brands we saw earlier in the week. So a little bit of a problem there. Henry's asking about Square. Square. There it is. So Square's a recent IPO. I believe they're not too old here. They are not that old at all, just a couple years old. So new stock here that got a lot of attention going way back into here. This whole Bitcoin excitement thing in there, or not Bitcoin, the crypto excitement. I think that continues. I don't think they've changed their minds at all on that or the process of going forward. I know there's some regulatory issues that they're going through, but you can see investors don't care. If we use only a chart to talk about this, investors clearly don't care. The stock remains at highs. Even when the stock market suffered a really strong sell-off there, no, people weren't too quick to get rid of their Square shares. So stock remains at highs. They look strong to me. So that's what I have for you there. Hopefully that helps. Carlos just started watching your videos and had to subscribe. I love you, Carlos. Thank you, sir. I appreciate that. I don't want to make this too long today. Hey, stay tuned. So later on our podcast today, I'm going to try to record all of it so we can post on YouTube as well. Stock Madness. Me and my brother set up a bracket of some stocks. We pitted up against each other. Today was the last day, so we're going to check their performance today and see which ones move on to the next round of our Stock Madness thing. So just a little fun. Nothing too serious. I like to kind of have fun with all this. We're trying to make a financial sort of content thing that's more interesting than your media channels. So we'll see how we do. Have a great weekend, guys. If you're thinking about Jazz Wealth, go to jazzwealth.com. We're actually going to change the website soon. It's going to be sweet. We're making a lot of updates there to just try to make the process simple. Investing long-term for retirement is so friggin' complicated that I'm just trying to go through step by step and get my company here to make every little part of the process simple. Test it out. Go to Invest Now. Move your Roth IRA over to us. If you have an old 401k, move that over and see how simple that I'll make it on you. I hope you guys have a great weekend, and we'll be back on Monday ready to do it all again with the new YouTube schedule, so check it out. Lots of good stuff coming. Enjoy.